Welcome back to the channel. If you haven't done so already, please like and subscribe. So today's video, I'm going to be going over my balanced portfolio with a 6.2% dividend yield. I thought I'd just show you before we dive into that though how my other portfolios are doing. So let's start off with the simple growth portfolio. All these portfolios, they're under a month long, so they haven't been open long. But they're doing pretty good anyway. So the simple growth portfolio has a growth of 2.05%. The diversified growth portfolio has 6.23%. So that one's doing really well. I'll do separate videos on these. So I have playlists for the dividends and the growth. So pop over to my channel if you want to have a look at them. The simple dividend portfolio is at 2.53%. And my diversified dividend portfolio is at 1.8%. But today we're going to be looking at the balanced portfolio at 2.67%. So let's have a look. So the cost of this portfolio is 0.31%. You don't actually get a bill for it though, it's like in the background, so you don't have to pay anything. The dividend yield is 3.78%. Now the reason it says 3.78% is because only half of my portfolio is in dividends. So it's more like double that, because I popped the yields in on an Excel spreadsheet and it came out at 6.2, but I'm only putting half the portfolio into those dividends. So let's see. Right, I opened it on the 7th of July, so it hasn't even had a whole month, and the return is 2.67. Right, so here's the portfolio. Before I go, I'm gonna go through each of these ETFs one by one, but before I jump into that, I want to explain why I've chosen what I have for the reasons. So I have 15% in silver and 15% in gold. Now the reason for this, especially on the gold side, if the market goes down, people tend to jump into gold for safety. Also, it's on average about 20% a year, and I'll show you quickly while I'm talking about it. This year, it's done 38.41%, which is really good. Now, I think the reason gold is doing so well is banks and foreign companies are investing more into gold. So I'm hoping it will continue. Nobody knows the future. So that is why I have such high percentages in silver and gold. So that's 30% of the portfolio. I have 20% in like bonds and income. So I think it ranges from about 4.5 to 7 on average, and there is one at 12%, but that's an odd one. So that's for steady income. So the other 50% is in dividend ETFs. Like I said, it's about on average is about a 6.2% yield return, but there is growth in there as well. So, it could be 12%, for example. 6%, 6.2 might be from the dividends, and then another 6% from the growth. And the reason I've decided to do this is I don't want to put so much into equities. So like I said, I've only got 15% in there. And it's because when there's down years, because the market goes up and down, that's just the way it is. But when it goes down, I still want some money coming in. So it's about hedging. So I'm hedging by having gold and silver, and from having the income and from the dividends. So say the market went down 10% and you were just in the S&P 500. You're down 10%. That's not going to feel good, is it? But if you invest in dividends and growth, say there's no growth on that year. So say dividends don't go down as much as like the S&P 500, for example. So you won't have as much volatility, but you'll still have your 6.2% coming in, even if it's a down year. So it's about protecting my investments and trying to have steady income, regardless of if the market's up or down, really. So that's the plan. So let's run through it. So the silver for the year is at 31.07%, which is really good, isn't it? That's a really good return. I can show you over the max here as well. So since January 2016, it's got a return of 195%. So that's really good. Right, let's have a look at the gold. So gold for the year is 38.41%. That's really good. Now this one is hedged. So it hedges out the currency exposure to the British pound. So I do hold another gold ETF in, well, it's not an ETF, is it? But because it's a commodity. And it's doing about, I think it was 32 or 33%. But if you get the hedged one, it's higher. So yeah, because the currency exchange rates between the UK and the US dollar affects the return. So that's a really good return there. Right, now this one, I really like this one. This is listed private equity. And over the year it's done 13.6%. If you look over the max, so since 2016, it's done 227%. That's a really good return over the years. So, because I tend not to look just at the yearly, because that's like a small snapshot in time. But when you look at the max, you can get the average. So, what does it do on average? Because let's say it's done 20% this year, but over the other years it's only done 5%. So it's better to look over the long term to figure out what the average is. And to do that, you take the 227% and you divide it by the years. So that's how I look at things. It also has a 2.74% dividend yield that's paid semi-annually, so that's a bonus as well. So I really like that one. It looks like good steady returns. Right, this one's emerging market dividends. So this will be for the yield. The yield is 7.42% paid quarterly, which is really high, which is good though. So over the year, it's got 14.03%. So that's pretty good as well. Now this one, over the max, you can see since 2017, you're not getting as much growth there, but you are getting a really good steady return on the dividend yield. So I've got a mix of dividend and growth in here, as you'll see. Right, let's have a look at this one. This one is developed market dividend leaders. 18.74 for the year, with a 3.86% dividend yield paid quarterly. So that's really good. I will just show you down the bottom quickly if I haven't done so already. So down the bottom it will tell you how many stocks you've got in there. It will show you the percentage that has gone into the stocks. There is a key investor information PDF which shows you more information there if you want to look into it. And it will show you, so regions. You can see that there, Europe 54%, North America 21%, and it also will show you the sectors. So for this one example, it's got 30.6%, industrials 9.1%. So you can look all that. I'm not going to go through that for every one of these, but you can do that. And you can see the full description here as well. Right, but I'm just going to be mostly going over the yearly returns for this and the dividends. So right, This one is an ultra short income. This is for short-term bonds and money markets, and it's a 4.82% monthly. Now, the reason this one is in here, I'm not normally a fan of bonds. I do prefer the gold and silver, but you can't have, there aren't many ETFs that will pay monthly, and I want some monthly income. So I'm sacrificing the growth to have a regular monthly income. Yeah, so you see there's 4.62. There's no growth on it, but it is steady income, but it's a bit like a savings account, really, isn't it? Right, this one is emerging market sovereign bonds, 5.26 for the year, and the dividend yield is 8.06. That's quite high, isn't it? It's good. Semi-annually. So that's that one. I don't have too much in bonds, to be honest. I'm more of a dividend investor. You can see here the percentages of what I have in there. So that's 3%, for example, of the whole portfolio. Right, let's move on to some dividend ETFs. So this one is Euro stocks, high dividend, low volatility. So as I mentioned about the low volatility, when the markets go down, these won't go down so much, which is good, which is hedging as well. So that's 13.4, 30%, or just to say 30% on that one. So that's a good yearly return, and the dividend yield is 5.34% quarterly. So like I say, it's a good mix of good dividend yield and good growth. Europe's doing quite well actually this year. It's good. I'm not saying well every year, but this is why I've diversified. I've diversified by not, because some investors will say, "Oh, just buy the S&P 500, or just buy the All World, which does a little bit less than the S&P 500, or just buy the Nasdaq, which is tech." But I want to protect my income. I want to grow it, but I want to protect it as well. So rather than doing that, I've diversified, like with the gold and silver, with the bonds, with the dividends, but I've still got growth on it as well. All right, let's look at this one. So Euro dividend. So this one's 32.41%. It's really good. If you're wondering what this little blip here is, it's when Trump was talking about his tariffs. So yeah, that's what that was. So 4.3% paid quarterly on the dividend. It's a good yearly return. And you may think, why have I just shown you two Euro ones? But they're going to probably come in at different times in the year as well. So it's about timing as well. You don't want, for example, you don't want all of your income to all come in June. Right, so this one is the benchmark, the S&P 500. Now, this is the ticker symbol VUSA. There is another ticker symbol, VOO, VOO. The VOO one is not doing as well as this one, and it's about the currency exchange again. So this one's doing 13.11%, but if you look at VOO, it's not as high as that. So there is a small dividend yield of 0.77 paid quarterly. This one's in here. It's like the benchmark. So I can see how my portfolio is doing over if I just bought the S&P 500. But the average growth on this is good, to be fair. So it's good to have it in here. Yeah, see, this is the tariff flip again I was on about. Can you see when I was showing you the other ones? Let me go on the yearly, it'll be easier. The other ones I've showed you, they've gone up a lot more and recovered better, but this one hasn't. It's still a good return, but so since 2017, 176%. So it is good. It's not the best of them all, but it is good. But I don't want to just be invested in America. Right, global dividend aristocrats. Aristocrats are companies that have raised their dividends for so many years, basically. So we've got 8.73, a 5.81, sorry, 5.18% dividend yield paid quarterly. So that's really good. I'll just show you down here as well. You've got 199 stocks, and you can see the holdings there. Right, let's look at the next one. Right, this is emerging markets, high dividend, low volatility. So we have 6% dividend yield paid quarterly. That's really good. 12.04% return for the year. So this is a shorter time frame. So from 2020, it's up 35.2%. So I like that one. Right, let's look at the next one. Right, UK. I got 3% in the UK. I think over the whole world, the UK does about 3 or 4% of the return. So yeah, that's about matching, isn't it? 18.36%. That's really good, isn't it? Yeah, can you see here? So this is the Trump tariff in the news, and this has recovered a lot more than the S&P 500. All right, so we've got 5.14% quarterly. So the UK and Europe tend to pay higher dividends than the US. I think it's because they've been like running longer, so they've got a history of raising their dividends more each year. So that's quite good. Right, what's the next one? You may be wondering why I've got so many in here, but to be diversified, I can't just have like the UK and the US, for example, because I don't want to put all my eggs in one basket. So if the UK has a bad year, for example, it's 3% of my portfolio, and that really wouldn't bother me then. So we've got Pan Asia Dividend Aristocrats, 18.61 for the year, 4.83% dividend yield. That's that one. Right, NASDAQ. So this is the tech. I've only got 3% in here. Now, tech normally does quite well. It's at 17.82% for the year. So you see it hasn't recovered like the other ones yet. But over the long term, normally, it does really high returns. So look, from 2016, 456%. So it's probably the highest in this portfolio. But I don't want to put too much into tech, because I think America and tech is very overpriced at the moment. So yeah, and there's not much dividend yield on here, 0.33. But like I said, there's not a lot in my portfolio in that. Right, this one's more for income. So this is a covered call one. So I don't normally do too many, but it's got a 12.78 dividend yield paid monthly. So that's more for the monthly income, but there won't be much growth on that one. Right, this is emerging markets dividend aristocrats. We've got a 4.79% dividend yield and 15.41% for the year. So this one is UK quality dividends equal weighted. 4.87% dividend yield, 13.16 for the year. Right, what's the next one? Right, Pacific excluding Japan. So for the year, oh, it's waiting to load. So 5.15%. I'm not sure when this gets paid out. It says it's a regular, so I have to just wait and see when that's a bit of a surprise pie with that one. 15.69% return for the year. Right, this one is Australia. This is a new one I've added actually. So we've got a 2.84% paid semi-annually. And the reason I've just added this one, it's got a 7.27% return on there. You see it hasn't quite recovered, but over the max, look. So since 2016, it's got 100% return. So again, it's about diversification. So I've added that one. And I've added Canada. Until I've added it because there's nothing in here yet. See, these have got balances in and these haven't. But they won't have any money allocated to it until my next payment goes in, because I put £100 a month in. So I've put Canada on here as well. So Canada's a 2.06% paid semi-annually and 19.75 for the year. That's really good. So a mix of dividends and growth. Right, these three I already had. These are all more about income. 3.6% monthly, so that's really good. But there won't be any growth on that. All right, last two. Nasdaq equity premium income, 5.19% paid monthly. Yeah, there's not much growth on there. It's more about the steady income. And the last one, World Equity High Income. So this is a 9 point. That's really good, isn't it? Yeah, pay higher than average dividends. That is definitely higher. Other people say anything over 2% is good. I think anything nearer to 5 is good. Right, so that's the portfolio. I've shown you it's up 2.67%. Like I say, I pay £100 a month in. I have it in my ISA on Invest Engine. So this button here, when I get paid my dividends, I don't know if I've had any yet. Yes, I've had some dividends. You can see here, it's saying in July I've had 0.48 pence come in, and it shows you where it's come from there. So it's saying it's 6 ETFs, and there's a bit from VOOC and VHYL. So you can keep an eye on your dividend income, which is nice. Which again, the diversification will show you over the months what months they're coming in. So that's good. And it'll also show you when I've got the monthly ones. So it's all about, getting different income over the year. And this auto invest button means that when I get paid a dividend, it will get reinvested. I think it has to be a minimum of £1 or something to get reinvested, but that's going to stay on. But when it comes to me retiring or wanting to take some income out from this, all I need to do is turn that off and I can take that out. And it's also tax free. And unlike the SIP, where you have to be a certain age to take it out, you don't with this. And there's no tax on any of it. So I think that's amazing. You can have this in your SIP as well, but I want this in my ISA account because I want the flexibility. So I do a weekly update on this. So if you want to follow along with me and see how it's doing, then please like and subscribe. Like I say, I do have a more dividend focused portfolio and a growth portfolio. The growth one's doing really well actually. I think it's like 6% and that's in less than a month. So that's doing really well. So I'm going to do a video on that next. But pop over to my channel and have a look. They're either in the video section or in the playlist section. There's also some links below for Invest Engine if you want to go and have a look. Um, I think on the dividends and the growth, there's a section where you can copy the portfolio. So yeah, so please like and subscribe, and I'll do another update next week for you. Thank you.